All right, hello traders. Sorry for the slight delay there. Thanks for joining us. We're going to be doing another webinar with in conjunction with Shine's Trading Room. I'm Mike Bagdhadi, Chief Retail Officer at Lightspeed, and with me today is Mike Bagdhadi. He's a regular contributor to Shine's Room, and I think we may be fortunate enough to even have David Shine himself dropping by to share some of his trading wisdom. So I'm really excited to be hosting this webinar today because I think it's going to be very relevant to our active trading audience. This really deals directly with what so many of you have been struggling with recently, and that's a low volume, low volatility trading environment. And Mike is going to discuss some of the techniques that can increase your chances of taking profits out of exactly this type of market. So let me just get some disclosures out of the way quickly. This webinar is for informational purposes only, so nothing that we present today should be construed as investment advice or recommendation by myself, the host, or the presenters to buy, sell, or hold any securities. And as we do with all our webinars, this one will be recorded and uploaded to our website archives. You can go to lightspeed.com/webinar if you miss anything, or if you want to check out any of the past webinars that we've done over the years. And if you guys have any questions, just type them into the webinar chat window. We're going to do the best we can to answer as many of them as possible as time allows. So let me not delay any further. Let's turn the presentation over to Mike.
Hey Mike, this is David Shine. I just wanted to get on for a minute and thank you and thank the community for continuing to allow for us to present and to pass on as much vital trading information as we can in education, as education in the stock market is of the utmost important, and it is an ongoing continuous process. It's not the learn in one day type of thing. It is an ongoing, ever-changing landscape. So I do want to thank you, and I want to introduce a good friend and a super talented trader, experienced trader over the past 20 years in the marketplace. Good friend of mine. His name's Mike Bagdhadi. So without further ado, I'm going to pass the microphone over to him. And I'd love to hop on at the end of the presentation just to give my insights on the upcoming markets and what I look to do. So I'm going to pass that over to Mike right now.
Sounds good. Thanks, Dave. I figure we might have heard from you.
Thank you, Dave. Thank you, Mike. And welcome everybody to the webinar. And I appreciate the time. And I hope everybody gets a little bit out of it, and you find it very helpful. Let's get to it. We're going to try to start with to see how to trade with smartness, with intelligence, with looking for the buyers and sellers in the market to know exactly what we're doing. So you won't have any stress. People ask me all the time whether or not my job is very stressful. You work on Wall Street, you're a trader, you must be very stressful. And I look at it as, no, it's not. If you know what you're doing, no. Brain surgery is stressful, not trading stocks. It should not be stressful. It becomes very easy to you if you do your homework, you do your calculations, and you could see what's going on, and you know where to enter, you know where to exit, and you take calculated risk all the time. In any time frame in the market, you have to know what you want, and you just do it. If you're an honest trader, you just got to do it. So what we're going to be discussing today is low-stress trading and setups. We want to identify the following. We want to follow smart money. This is what Wall Street is about. Because if you're just an individual trader, or you're trading in a chat room, or you're trading from home, or you're trading your own capital, or you're trading whatever you're trading, your kids' money, you want to respect the money. You want to respect the market. So you want to know what big money managements are doing, and you want to be on their side. You don't want to be against them. There's a lot of traders, they tell you, you probably feel the same way. If you're sitting at home, you'd say, oh, I think there's a camera in my room. They just don't like me. But that's not true. Nobody cares about your 200 shares, 1,000 shares, 5,000 shares. If you're trading the proper way and you're following big money in the market, you're going to make money all the time. We're going to be looking at swing points and reversal points. We're going to be looking at leading indicators, leading indicators versus lagging indicators. And that's what a lot of traders, that they make mistakes. They follow all these indicators that everybody puts out there, which they're great. I have nothing against them. I use them. But they're all lagging indicators. We want to be able to spot the leading indicators and be on the front line first with the smart money. all the time. We're also going to be looking at pivot points that Lightspeed just gives it to you on your platform. Lightspeed platform just supplies pivot points, which is a calculation. A lot of people know pivot points, and it's just a calculation of the high, the close, the low of the day divided by 3. There's a calculation, but you know what? As soon as the stock opens in the morning, those pivot points, they're right on your screen, on your 1-minute bar, on a 5-minute bar, on 15-minute bar. They don't change. They're the same numbers. They're also lagging indicators. They're not leading indicators. They're just a zone area. We're gonna show you ways how to trade around them, and hopefully you'll see it profitable. Low stress trading. Now, how do you know when the buyers are done, when the sellers are getting in, or when the buyers are done, or the sellers are done and the buyers are getting in? The market is, think about it. If you sell in a stock, somebody's buying that stock. If you buy in a stock, somebody's selling that stock. So it's buyers and sellers in the market. So you want to know when the buyers are done. So if you're long, you want to get out of your position. If you want to know when the sellers are done. So if you're short, you also want to get out of your position. And notice that I want to be on the same side of the short. I want to be on the same side as the longs. I don't want to be against them. So you always want to be on the right side of the market. So we use, it's always better to be on the same side of the market, obviously, because you don't want to fight the market. The market, it's too strong for you. No matter who you are, it doesn't matter. You just want to be on the same side. It just makes your life easier. It makes your trading easier. And you're just going to be a happy man at the end of the day. So to make things easier and stress-free, let's go into identifying and following the smart money. We're looking here at, this is a 5-minute chart of WHR. And if you see from 9:30 on, I always wait about 15 minutes to half an hour in the morning to see what direction the market's going to take me. What's happening in the market? What's happening with the spiders, the S&P 500? And whether you trade candles, whether you trade bars, it doesn't really matter. Whatever your preference is. Basically, what each bar tells you, or what each candle tells you, it's a 5-minute. It's an opening, close, highs, and lows. But we want to be able to read the story. There's a story behind every candle. There's a story behind every chart. So the more pieces you put together, the more clearer picture you're going to see. So right now, there's a lot of people who don't believe in technical analysis. They only believe in fundamentals, which is fine. Fundamentals is great. But you know what? There's a lot of information on Wall Street. There's a lot of information out there. And people know the information sometimes way before it comes out, or they do their homework. Or let them do their homework. But if I know how to read the chart, and I could read what the story is telling me, what the information is going to be, then I'm going to be ahead of the game every time. So what I'm looking here is the first 5, 10, 15, 20 minutes of the day. And you see it's like a channel. Now I have moving averages here. You could put any moving averages that you like. I use the 8, the 20, the 60, the 120, but you could see them. But if I'm looking at this picture right here, what am I looking at? I'm looking at the downtrend. All the averages, the closer, the 8-minute average is below the 20. The 20 is below the 60. The 60 is below the 120. So it's telling me it's a weak stock. It's a downtrend. And we opened right below all these averages right here. So if I'm just waiting and I'm seeing this, right? This is the high of the day. This is the low of the day. This is the candle that broke the low of the day. Do I want to get short here? No. Then you say, why not? It broke the low of the day. You shouldn't get short. Well, no, I don't want to get short yet. You got to wait to see what really the big money they want to do. Now you see a green candle here. And a lot of people just say, oh, well, it didn't break there, so maybe let's come back. But we don't know that. You don't know anything. If anybody tells you they know, no, they don't. But what I'm looking at here is a red candle that broke the low of the day. That much I know. So now I see a green candle here. Now it's an inside candle to this big candle right here. So what I'm looking at, now I could say to myself, it's an inside candle. So what are they doing? It's a pause. So I'm looking at the whole picture. It opened below the moving averages. It broke the low of the day. That I know. Do I know where the stock is going to go? No, I don't. There's no way for me to know that. Now, if I'm looking at the spiders, and I see also the spiders are coming down, so there's better of a chance that, you know, WHR, it's going to follow that trend. So I could say to myself, I could get short at the low of the green candle, and if it breaks the high of the green candle, I'm out. So now I just identified my risk. Because the only reason this is, you know, you're going to say you're going to short the green candle, that's where the buyers are. But no, it's a pause. You've got to remember that. They just pause to see what's happening. I'm really facing it because of that big red candle that broke the low of the day. So now I'm shorting here, and my stop would be here, at the high of that candle. Well, obviously, if I shorted here, and I'm on a trade, I got to take the trade. If I see it, what's happened? We just went down. Now, this is, you're looking at a trend. The trend just making lower lows and lower highs. Lower lows, lower highs. Lower lows, lower highs. That's forming a trend on the low of the day. That's just like it's perfect trade. Then we got a green candle. And there's a lot of guys that, traders or Wall Street or women or whatever, just traders on Wall Street, they see this, they say, okay, this is the low of the day. We want to pick bottom. Well, no. It's the same scenario that happened way up here. Look at that. It's an inside bar. So you could either add to your position, or if you just did the whole position there, you want to wait. If it takes the high of that candle, that's where you want to cover. You cover your short, because that means that you could have a bounce back, and then you want to look for another entry. So once it did not do that, we broke that again. We have the same scenario as here. We started to make it lower highs and lower lows. Now we got another pause bar here. So we tried to take the high of this candle, and then what happened? It failed. So they tried to pull the stock back, but it failed. So even if you got shaken out and you covered, what just happened when the bar closed? Now remember, each candle is a 5-minute bar. So you got to wait till the bar that closes. You cannot assume anything. You assume anything, it's going to get you in trouble. But let's say you got shaken out for some reason. Now we still have the same scenario. Once it breaks that low of that candle, you reestablish your position. And that's what makes day traders. You reestablish your position. So now we went back down again. And look what happened again. Isn't that ironic? It's also an inside bar. Look at this. We went down again. We broke this. Now this candle here big. Now 1, 2, 3, 4 inside candles. So you want to call this a bearish flag. There's a lot of fancy name on Wall Street. I just use simple stuff. It's a big candle, and I'm waiting to break the low of that green bar, because that's what's going to tell me I'm still going lower. That's what big money are doing. They're just selling the stock. They don't like it. They just sell it. They want out. If they want out, they want to sell it. And you know exactly where to get in. Now we broke this. We got another small green candle. We broke this, and we kept going. Look at this. That looks like a reversal. And then what do we got? We got another small green candle. Look how many times. From 9:30 to 12 o'clock to lunchtime. And then we came down, and this is the trade. That is a beautiful, beautiful trend. Following the smart money on Wall Street, you could reestablish, you could lock in money, you could add to your position. It depends on your comfort zone. It depends who you are. It depends on your time frame. It depends how much money you have. It depends on your account. Whether you want to do 100 shares on top, or you want to do 500 shares live, you want to do 5,000 shares on top and just hold it, you know, or you want to do 100 shares on each time, and then you just, that's how you lock in your money. This is following smart money. Let's go to the next chart. And here we saw Citigroup, letter C, today. Actually, this is 418. That's today. That's what the spiders, they gapped down this morning, and they pulled right back up. So what does Citi do? This is a pivot line anyway, but that's the yellow. We're going to be talking about that. But look at that pivot line. We're going to discuss it a little bit later in the webinar. We opened right below it, but we closed above the pivot line. We went up. We went up. Do we know that Citi was going to do this? No, we don't know that. But look what happened. Now we got a red candle. What is that telling us? That's the pause, like we saw the green candle on the downside. And now we take the high of this candle, and we started going. Again, it's the same scenario that we did before. But, you know, WHR was on the downside. Citigroup is on the upside. It's just the opposite. And today the market was down all day. And look at Citigroup. It just kept going because they had buyers in the morning. So now they took the high of this red candle. We went up higher. This is R1. We're going to be discussing that later on. This is first resistance in the day. So we broke right through it viciously. We didn't even stop. We stopped a little bit here. We broke right through it. But look what happened the next candle. We came back and we just sat on it because resistance becomes support and support becomes resistance. So we stood here. Now they also waited like, okay, what is happening? Look at this. That's also a pause. There's no reversal. There's nothing here. So now what do? We went from resistant 1 to resistant 2, resistance 2, and we hit it correct, right to the penny. It doesn't always happen. It just happened today. Those pivot lines, we're going to be discussing it later. They're just a zone area. So it doesn't have to be perfectly, but it just happened to be perfectly today. Maybe because I knew I was doing the webinar. And look at this. So you know where to get in. And once you have the resistance, you know where to get out. So you know where to get in, you know where to get out, and then you could always reestablish your position. Now here you'll say, okay, we broke that pivot, but look how we failed. And then we're going to be discussing this later. So that's the trade was done here. And this is from 9:30 to 11 o'clock. Easy trades, no stress. You made your day, and you went out to play golf this morning. And it's just, you could put in another 18 holes with no problem. So it's just, and that's on Citigroup that trades millions and millions of shares. You're not trading something that trades 100,000 shares in the first half hour that you don't know if they hit the bid. You got a spread of 30, 40 cents. It's a tight spread. It's a nice, easy trade that you could take all the time. Let's see another chart here. Okay, like I just said before, Lightspeed platforms, they give you the pivot point. I mentioned it before. You have the central pivot, that gives you the direction for the day, whether it's going to be up or down. The way I look at it, central pivot, it's very close to the close of the stock of the day before, most of the time. So if it's trading above that, it should be positive on the day, or it should be, positive indication on the day. If it's trading below that, it should be a negative indication. And then you have to wait to see what is really happening in the first 15 minutes to half an hour in the morning to see which way it's going to go. Now, if the stock, obviously, if it's been trading on a daily chart in the range, so those pivots, they're going to be closer and closer together. But if it's a volatile stock that moves 2-3 points a day, those pivots, they're going to be wider. So they're going to be more sufficient, because if you go from a pivot line to R1, let's say, you bought the stock on a pivot and went to R1, and there's like a point, you know what? You cannot assume it's going to break it. You want to get out there. Maybe I'll get out a little bit before that, like 10, 15 cents before that. Who cares? I just lock in my money. So that's what I want to do. Is on the short side, if it breaks the pivot to the downside, if there's a wide range between the pivot and S1, you want to start to lock in some money there. And you always want to know the true average range for the stock. That's very important, to know what's happening. Because I like to trade stocks with no news on them, believe it or not, because it's just easier to trade. Because with the news, you don't know which direction they're going to take. There's going to be buyers or sellers. It's crazy. And you can trade those, but if you know the true range of the stock and you can base it on those levels, it gives you just an easier trade. Now, I mentioned before that I wait about 15 minutes to half an hour, so I'm a little bit ahead of the schedule here. But, just to see what is happening, because real money, they come in the morning, and what do? They test the market. If they want to buy the stock, sometimes they sell it first to see if there's sellers. They don't know if there's sellers out there. Maybe they just happen to be on a day that somebody's coming in with 2 million shares to sell, so they could buy it cheaper. Why should they jump in the first 5 minutes of the day and buy everything they need? But if they want to buy 10 million shares, they want to ease it out all day long. So they want to get in and get out, and they want to test to see what the market is going to give them to have a good average price by the end of the day. So, like I said before, if the stock's trading below the pivot line, that could give you indication that it could be going lower. If it's trading above it, it could be going higher. And like I said before, again, the support becomes resistance, and the resistance becomes support. So you got to keep that in mind all the time. Now we're looking here at Citi again, because I'm going to show this is the 5-minute bar, and this is the pivot line. So we spoke about it earlier. Again, those are the pivot, R1 and R2. Now, like I said before, we stopped a little bit at R1, but we definitely stopped at R2. And keep an eye on this candle because I'm going to be discussing this later on. Just keep that in your head, and you will see it again. Now, we have here also on the 15 minutes, and the reason I put in this chart on the 15 minutes, because I do follow the 15 minutes, 60 minutes, but I just want to show you the pivot do not change. The pivot, as soon as the stock opens in the morning, they stay the same thing. So if you're looking at the 15 minute, again, we hit the R2. If you trade a longer term, it depends what kind of trader you are. So we hit the longer term. So we hit the pivot here. We came back. We stopped at R1. Then we broke it. Now this support becomes resistance again, and then we came down again, and that was the day. And here WHR in the 15 minutes, basically on the same day, and this is what happened on the 15 minutes. So we got 15 minutes, half hour, then we broke the pivot line. We stopped here. We closed that 15 minutes on R1, and then we closed here 15. That's about an hour and 15 minutes. We closed here, and then we came down. Just showing you different scenarios for the pivot lines, how to use them. But no matter what time frame you have, it's the same price line. Same price for every pivot all day long. They don't change. Now, how do we know when the trade is done? We got to look for the reversal bar. What makes a reversal bar a reversal bar? Let's look at this chart right here. This is basically the same chart that we talked about before, which is the trend line. Now, why would you say, okay, this is a green candle, yeah. But what makes this a reversal line? And this is the important. It's just very easy to say. Like, why wasn't this a reversal line? First of all, it's a green candle, so the buyers are coming in. The buyers won. The buyers against the sellers. It opened and it closed higher, closed at the top range. But what most important, and everybody should be writing this down, is what's most important for the reversal candle is that it has to make a new low from series of candles. So, in this scenario here, it happened to be the low of the day. So it has to make a new low and close on the upper range. If it does not make a new low and it close on the upper range like here, it does not count. Like here, it does not count. It has to close on the lower end of series of candles, 3, 4, 5, 10 candles, whatever. The more the better. And then close at the upper range. That's what you call a reversal bar. And the reversal bar, that doesn't mean I want to get long here. You can. If it's way extended, it depends on what kind of trader you are. But that definitely, I want to close my short position. How to get in the pullback trade, which is swing points. And we look for, swing points is we look for 2 higher lows at each side of a green candle, or to go long. Using swing points on a pullback is a leading indicator for an entry point. I'm going to show you Citigroup again. Just we keep it simple, but this is now, it's a daily. So every candle is a daily. It's one day. So we always go to the left, and to know what's happening in the past, so we could decide what might be happening now. So if we look here, right? If we go from the left here, we started an uptrend. We made a higher highs here. Now we have a high here, but we started making a higher high, and then we pulled in. And look at that nice reversal candle. 1, 2, 3, right? Made it lower lows, closed in the upper range, with 2 higher lows on each side. So that becomes a swing point. So on a daily, if you're a swing trader or you're a position trader, and those, they exist also on the 60 minutes, on the 15 minutes, on the 30 minutes, on the 5 minutes, they exist everywhere. But I'm just showing you this because it's just easier to look at. So if you see this, you buy here, and this is your breakout. That's what a lot of traders, they look for. They look for a breakout. But who was smarter and who got it cheaper? We did. We got it right here. And this is our stop. But you have to know, you know where to get in, you know where to get out. And if you cannot take that risk, do not get in the trade. And look at that nice trade. We take the high, look at that nice reversal. We opened, we closed after a series of making higher highs, higher lows. So we got in here, we know to get out here, even at the end of that day, because you know what, I saw that reversal, I'm out. I'm taking my money, and I'm going to wait for another And over here, it just broke the 200-day moving average. Maybe a lot of people are getting in. But, that told me a story, told me something. I need to lock in my money. So we get back here, 1, 2, 3, 4, 5. We got another reversal above the 200-day moving average. Do we take that trade? Absolutely. We take the high. This is our stop. Look at this. This is our stop. As a swing trader, right there. Perfect trade. Those are the swing traders. This is the swing points with 2 higher lows on each side. Now you also have swing points with 2 lower highs on each side for the opposite direction. So now we saw the reversal bar. We saw the swing points. We saw the trend lines. And I could talk about this for about another 2 weeks, but they're telling me I only have very limited time. So I hope you enjoyed the webinar, and I hope you got something out of it. And I thank you for your time, and I think Dave here is going to share something very important with you.
Hey guys, how are you? This is David Shine. First I'd like to thank Mike Bagdhadi for giving us the insight. As you guys know, these webinars are limited in time, and as Mike said, he literally could talk about it for weeks because he talks to me about it for weeks at a time. So there's a ton of information. As you guys know, this is an ongoing process as we continue to also do our best to not only educate our community but also the Lightspeed community and try to give as much information over as possible. So we've done a number of these webinars already. Mike, I wanted to know if you had some questions that came in from the field, if anybody wants to ask something to, I guess, Big Daddy, or, I wanted to give a few words on what I'm looking forward to, I guess, for the next couple months.
Sure. Yeah, Dave, we don't have any questions pending. I'll just remind our audience, guys, if you have anything that you want to ask, just go ahead and type it in now so we can get to it before we end things here. So, Dave, I think you can go on.
Okay, let's do that. So, once again, my name is David Shine, founder of ShinesTradingRoom.com, and what we try to do is also try to create that environment for traders of all backgrounds, skill levels, and different, I guess, options and equities, asset classes, and everybody has their own sort of vision on what they look for out there and what they see out there, and especially coming up now to the, I guess, spring and summer season. And you get to this summer where, trading might slow down a little bit, and as far as the volatility goes. And I just wanted to talk very briefly about a couple things that I look at coming up on these seasons, I guess, seasonality. And this is, from my perspective, I think that the broader markets potentially get a little more tough to trade at this point coming up, but I also think that every day there's stock-specific opportunity. And being at the forefront of technology and breaking opportunity, especially using the Lightspeed platform, being able to get in and out of opportunity as it pops its head up. If you guys go back and you look every single day, there are stocks up or down 20, 30, 40, 50%. There's movement all over the place. For me, I look for, and you guys know this as I've given, many classes before to the community here also, I look for this risk-reward, and the risk-reward really pops its head up when you see volatility and liquidity. So when you have that in specific names, maybe the liquidity and volatility isn't there on an overall market come July and August, summer doldrum months. But I look for specific breaking opportunities where the liquidity and volatility are there. And the reason is because if you have a potential $2 move to the upside, but you're able to be disciplined and controlled and keep your loss to the same usual 20-cent maximum loss or 25-cent maximum loss, depending on your risk tolerance, then you have a great opportunity to capture $2 to the upside, risk 20 cents to the downside, always use stops, at least that's my philosophy for myself, and be able to capitalize on those type of trades at a 10-to-1 reward versus risk. So in the summer, you're not going to potentially have that, or you may not potentially have that on an overall broader market picture, but you may potentially have that breaking opportunity on a daily basis where something pops its head up with a potential follow-through move on that specific name, even less than maybe the overall market following through one direction or another. So that's sort of my broader macro picture of summer trading. Of course, we talk about, every day being part of a trading community where you're able to hear what's going on around you. If you're out there trading in your underwear, these days through technology, we're able to include people to trade in our environment to understand and hear what's cooking out there on a daily basis, especially when it gets quiet, how important that is and how important it is to stay focused and to stay disciplined during those time periods. And a person may say, what do you recommend during that time period? I'm going to go back and always focus on that discipline, that ongoing mentorship, the ongoing idea that you might be trading alone, but you need to be feeling like somebody's watching you and looking over you to be able to not trade too much, not trade something where it's too thin of a market. If you can't control your risk on the downside, it's probably not a stock to be trading. But you still need to be able to have liquidity and volatility. So once again, it's even more looking over your shoulder, more being careful in particular on your trades. It doesn't mean necessarily to slow down if you see an 8, 9, or 10 on that rating scale that we always talk about. If you identify those trades, it is still ready and time for you to get out the baseball bat and knock the ball out of the park. So please keep that in mind. Also, on focus on seasonality opportunities. This is just for people insight into. I just put down 2 examples, maybe a Crocs versus a Deckers, and Deckers being more of a boot or a winter company. Do they slow down seasonally? And does every person break out their pair of Crocs? I'm not happen to not be a huge fan of the old school looking, big, hunky Crocs, bright colored green, but they do have multiple different styles, and is that something that we're looking for, a breakout, technically speaking, especially from what Mike taught us today, certain charts, certain trends, certain directions, that's something to look for also. Going back to the top item on my screen, selling premium decay in the options market. So I have not given a seminar, option seminar yet to the Lightspeed community, but it's something that we've been talking about. In the options market, decay is something that's an important factor to keep in mind, because time coming out of a stock or volatility coming out of an option will decrease the value of it. So the idea is if you could sell something for $1 and go away for a month or a weekend or 5 days or a long weekend, which I always look to do on that, like Memorial Day, Labor Day, July 4th weekend, and you look for that time decay to start adding up. All of a sudden you come back and you're like, I sold these things for $1, selling premium, sold them for $1, and I can buy them back for 40 or 50 cents, and I've made half the possible money that I could just because the thing decayed over the weekend, and it just came out of the stock, and I get to buy them back if I want. It's something that I look for to do, especially on long weekends, especially on slow times, to see that opportunity. Now, just to get more specific, because I know, Mike, it's very important to get specifics out there, and I usually don't do this, but I have certain things that I look for, and like this is one name in particular that I felt decay in, and this is the FAZ, the inverse of the financials, or the opposite. If financials go up, the FAZ goes down. So not only was I sort of bullish on the financials, this is going back a couple months, we talked about on the daily broadcast, not only that, but I have an opportunity here where this thing is going to decay. And I overlapped the S&Ps with the stock itself. And look what happened when the S&Ps rallied up and the stock itself also feels like it's just a slow bleed down decay. And this is time decay. This is just value coming out of the stock. So I'm going to go on to a couple others, and then we're going to wrap it up. If you guys want to ask any more questions, please do so now. ZSL, another one. Another area where I focused on. This is a name that, for me, it feels like continued decay, continued premium coming out of these names. I look for something at times. I look for names that seem to be shorts if they come out with good earnings, and shorts when they come out with bad earnings, and just shorts all the time, or longs all the time. And when I find these names, I stay all over them. As you know, my philosophy is I wait for a weak name to rally. When it rallies, I get all over it, especially if decay is coming out of it. Time decay, value decay, premium decay. Barnes & Noble's You guys out there, when's the last time you bought something in Barnes & Nobles? Take a look at what this chart looks like as the market rallies. Stock, is right down here towards the bottom part of the range, trading at 1104. Once again, these are today's charts. And just wanted to keep them as fresh and updated as possible. One or two more. DMND, same thing. Stock market rallies. If you look from the beginning of February, obviously the stock got pummeled then, but even when the market continued to rally, the S&Ps continued to rally, this thing went the other direction and just has been a short on every rally out there. One or two more, then I'm going to wrap it up. You got first
yeah,
solar,
we got a few questions
thing,
here too,
right?
Dave.
Okay, so should we take them now, or should I go through one or two more charts?
Finish your charts and then we'll take some of these questions.
Okay. So first solar, same type of thing. Solar sector, solar space, weakness throughout, hits that area in February, market continues to go higher, look at what happens to the stock. And it's just continued bloodbath, decay, value coming out. What happens is, and Mike touched on it, and one of his main points in sort of control trading is you're going with that trend. You're going with what the market shows you. The market shows you weakness, continued trend, continued direction, go with the flow. Don't be the guy who's contrarian to the trend, and continue to capitalize on that, especially if something can't rally when the market's strong. What needs to happen to that market in order to bring this thing up? And it just hasn't been there for some of these names. And I'm going to get to...
And Dave, what's the blue line in your chart?
I believe that's the S&Ps.
Okay, so you're looking at an index. Got it.
Yes. So it's an index, an overall market, and it's the market moving overall, and compared to the stock. Another one, Pandora. As we've done before, sometimes take a poll, just like I ask you guys out there when you last bought something in Barnes & Nobles. When's the last time you heard somebody pay for Pandora? Another thing, and I don't give any picks or advice or investment advice, as you know, full disclaimer goes out there. But when you see something performing like this, when the market explodes and the stock can't get out of its own way, and comes to the IPO market, the stock continues to get killed, just look at that directional move in this thing, just getting crushed. And I did take advantage of this by selling calls and bringing in premium month after month, especially when the stock popped its head up every time it popped its head up. Okay, what do you guys think this is? Same type of thing. Jay Lynn, this is Jeremy Lynn from the Knicks. This is a chart, this is a blog that I put out there a couple months back as the stock of Jeremy Lynn continued to race and have those blow-off tops that Mike was just talking about, and hit that saturation pivot point up there towards the top part of the range. I came out with my blog, and I did actually give my first stock recommendation on this chart, and it was a short on every single rally. I am a Knick fan, but his hype at 8 turnovers a game just pushed the stock up a little too high, and this is what the stock's looking like right now.
Just tell your story.
They're telling me a story right now. Okay, so we're going to end it on this, and Mike, if you want to...
Sure, let me just shout out some of the questions, and I think the first one may be for Mike. Yep. Hey, Mike, so one of the questions is there anything specific that you're looking for as far as volume goes with the reversals?
Volume always helps, but that's not what I look for. But volume does help. It does add to your conviction, absolutely. But sometimes the volume, if from the bottom that it's telling you maybe there's just whatever they're selling, it's done, or if they're buying whatever they've been buying for the past hour or 2 hours or so, they're practically done. So yeah, I use the volume to confirm. But not necessarily, that's not what I base on.
Volume is one of the tools.
One of the tools, right.
Okay. Any favorite time of the day that you make your day trades, or is it just depending on the actual opportunity?
Actually, you're just going to sit there and you're going to watch the chart. That's the hardest part about technical traders, because you want to be able to watch the chart, sit there, don't jump around too many different charts. And you have to wait for that opportunity, because you're only going to get one opportunity to strike. And once you see it, you're gonna feel it. But sometimes you could see it building up to your, if something that's ran up in the first half hour, I'm waiting for a pullback to have that swing point, like, and then like this Fibonacci retracement, I could just eyeball this stuff like 38%, 50%, 75%. Once I see that swing point forming, that's when I'm getting in. So you have to sit and wait for it. So there's no specific time, but I want to know something is happening.
Okay, good answer. We have another question here. Mike, you sound so optimistic about the market, saying that it's low stress and you can make money. So many other people out there right now saying this market's impossible to trade. Where's the truth here?
There's thousands of stocks in the market. There's thousands of shares trades hand every day. So how could anybody say there's no trades? It's just impossible.
I'm with you.
There's always a trade if you're right for the right opportunity.
Okay, and then we have...
also, if I could, Mike, if I could add to that,
sure.
I do think that also, I think that for the disciplined, controlled traders who show risk-reward, and this comes from traders who we've educated and mentored as of recently, to be able to put on $1,500 or $2,000 in a day on your screen and make sure that you're disciplined enough to be able to control your downside and keep your maximum loss to that $100 or $102 or $200. It really is still a numbers game for me and for the traders. So, for example, today, I myself, I did very few trades. I shorted some Yahoo for a 4 or 5 cent scalp, a couple thousand shares at a time, and then I saw a breakout on LinkedIn. And I bought a couple hundred shares of it for $1.50 move higher. So my point is that even when there's slower or less opportunity, the snipers and the disciplined traders still have an opportunity. And the goal is for all traders is to be able to become one of those people. And it goes back to the focus of the control, the discipline, and being a sniper.
Let me add another thing. This is Mike again. You have to traders and trading is a business. If you're doing it as a hobby, then that's not good. It's got to be a business. You have to respect it as a business. You open up your business every day, and you wait for customers to come in. You create stuff. You look for stuff. If business is slow, you're going to do something else to bring business in. So it's a business. You have to respect it. You have to think about it as a business, and it's one of the easiest business I think out there with no risk, with no stress. That's what I meant to say, with no stress. Because if you have a business, you have to come up with $20,000, $30,000. Well, in New York, just for rent, and then overhead. You have
That's
to have
on a monthly basis.
Insurance. Yeah, on a monthly basis in New York.
Yeah.
So the idea is to find these setups that you can evaluate are the 8, 9s, and 10s. And if
right.
you use the educational process and you are focused and you are controlled and you are disciplined, those 8, 9s, and 10s do or can potentially provide you with a less stressed environment. And that's what the objective of today's
let's go back to this question. If you want to open up a small retail store, you want to do your homework first before you open it. It'll cost you $500,000 just to open it. So with trading, if you treat it as a business, it costs you nothing like that. But
you can control it.
And then you can control it, and the money you could make is unlimited.
Okay. Yeah, Mike, that's a good analogy. Trading is absolutely a business. So, guys, one final question, and I think this one's got to be for Dave. Dave, what's on your feet right now? A set of Uggs or Crocs?
It's a good question. Remember, earlier we talked about trading in my underwear?
Oh, you don't want to see that.
Yeah, so I'm sitting here with 10 different people, and it's so awkward being in my underwear in front of all these guys, and I can't even talk about the flip-flops that are on my feet. But I am a Crocs guy. I am a Crocs guy, and I don't know if I would be caught dead in Uggs for men. No offense.
I think on that note, we absolutely have to end. Hey, Mike, I want to thank you for a great presentation, lots of valuable info. I hope all our audience check out shinestradingroom.com. Dave, also thank you for joining us. As always, you have a lot of insight. And then for anyone who's not a Lightspeed client yet, I'm getting some questions about the platform, etc. So what I suggest you do, if you're not familiar with the product, just go on lightspeed.com. Right on the home page, there's a request a demo button. Fill out your info, submit it, and we'll have one of our guys reach out to you, walk you through the demo setup. You can get a feel for what the platform has to offer. And again, if you missed anything on this presentation, just go to lightspeed.com/webinar. Everything will be uploaded there and recorded. So thanks, everyone. Have a great night.
Mike, thank you again. Everybody, thank you again.
Thank you, everybody.